So welcome to the webinar, everyone. Today we're going to be discussing what investors should be focused on when it comes to shareholder engagement and how that's evolving in the midst of the pandemic as well. So by brief way of introduction, I'm John Francis, Head of Research at Lauren Compere, and I'm joined by Lauren Compere, who leads Boston Common's Shareholder Engagement Program. So we represent Boston Common in Europe and have recently launched their global equity impact strategy and UCITS format together. Lauren's an industry leader in responsible investing, and she's considered to be one of the world's leading engagement specialists. And that's not just a nice comment from me. There's real evidence to back it up, some of which you can see on the screen. So the table on the screen shows data collected by the UNPRI on engagements led and also participated in across the globe. There's over 200 asset managers that have been surveyed here, including some of the behemoths. And you can see that Boston Common are in the top 5 here under Lauren's leadership, having led the largest number of these amongst competitor asset managers. Lauren's got over 30 years experience leading these global investor coalitions, and most recently she's been involved in the UNPRI collaborative engagement on tax transparency, which is a very high profile one. She's been at Boston Common since 2003, and perhaps that's a good place to start. So Lauren, what drove you to pursue a career in responsible investment, and why did you join Boston Common originally?
Actually, I met Geeta Iyer, the founder of Boston Common Asset Management and the predecessor firms. I've been working with her since the mid-1990s, actually, in a number of different firms. And I really thought that it would be a great opportunity to work with a group of people that were already talking about how to invest with ESG or SRI screens in the early 90s. And really taking up that challenge, and also taking up the challenge to engage globally. In fact, while my career only started in 1989, by 1995 I was already engaging global companies on things like sexual harassment. It was a pharmaceutical company, actually, that was my first engagement.
That's great. And why Boston Common? How's that evolution been since you've joined?
Well, actually, Boston Common Asset Management is an employee-owned firm. I'm one of the owners. I became an owner in 2019. No, sorry, 2009, right after the financial crisis, where the initial ownership was brought in. I've also helped to lead our B Corp certification. We actually think if we're asking companies to adopt good practices around a whole range of issues, from carbon neutrality to human rights to workplace, focus on gender and racial diversity, that we should prove that we're doing it within our own firm. And so we became a B Corp in 2016, and we've already been recertified, and are proud to be part of that coalition of about 2,500 companies globally.
Great. And I mean, before we get stuck into the meat of the topic, we thought it'd be quite interesting to conduct a quick poll on today's subject. So you should see coming up on your screen now a number of questions. So the main question here is, what engagement themes should institutional investors be most focused on during the next 12 months? If you could just put your answers in quickly. Clicking on the options there: workplace safety, green recovery, fair tax transparency, corporate lobbying, supply chain sustainability, equal access to medicine, and ESG disclosure. We will show those results very shortly, and hopefully they can become part of the debate here as well. So I'll give you a couple more seconds to click on those options. And then we'll move on. Okay, so quite a good spread here. ESG disclosure being the highest, tax transparency also being important in a green recovery. So yeah, look, perhaps we can touch on those as we go through a bit, Lauren. But thanks very much for your feedback, everyone on the call on that. And perhaps before we discuss the changes in trends that are going on, it would be useful to understand how you engage, what the techniques are, and what you think is most important when you're engaging, Lauren.
Well, maybe bring it to the issue of international engagement. I think most investors would think that we use something called the shareholder proposal that's really prevalent in the US. That's actually not our main form of engagement. I like to really look and take a step back and look at the ecosystem of who's involved. Is there government regulation? Are there industry or trade associations that are working with their members and groups of companies trying to engage in an issue? So first and foremost, we actually map out the ecosystem and look at points of leverage. So while as an institutional investor, we're absolutely focused on engaging our own portfolio companies, in some cases it might make sense to broaden the engagement to either other companies, through benchmarks, for example. I've spent the last 5 years ahead of COP21 benchmarking how green, looking at kind of climate strategies and how banks globally are addressing climate. In other cases, we might get involved and create our own benchmarks or support existing benchmarks. One of the things that was highlighted was ESG disclosure. So we think it's really important to support not only legislation around ESG disclosure, and we've done this like in the case of conflict minerals here in the US and supported EU legislation around non-financial disclosure or modern slavery or conflict minerals. So these are things that we think enable us to really then focus on how does the ecosystem and the drivers within the ecosystem influence individual company practice. We've even engaged organizations like the OECD because they themselves have issued guidance to investors, for example, on human rights due diligence. So we think it's important for investors to be at the table when consultations like this happen, because it is directly impacting our ability to do our own work, right, in terms of creating human rights disclosure for our portfolios. But it also influences then the way in which companies themselves feel that they have to disclose on these issues.
So you need to have a multi-dimensional approach, really trying to attack companies from all different angles, really, as well as approaching them directly.
Exactly. Yeah. I think some of these issues are so systemic and so complicated, and some of the exposure is so deep. For example, in the supply chain, something like cobalt and child labor in the Congo, or conflict minerals, or the way in which cotton is sourced in a place like Uzbekistan or Turkmenistan. These things are many layers below the first tier suppliers. And so industry collaboration, industry initiatives are key to actually changing company practice and creating impact on the ground.
And bringing it a bit more relevant to what's going on today, what impact has the pandemic had on the engagement themes that you've been focused on for decades? What's really changing now?
I would say that my biggest focus over the last couple of months in particular has really been the initial impact that COVID's had on business models, on worker health and safety, on the ability to sustain suppliers in the supply chain, for example. So we've actually mapped out and actively engaged and participated in a call to action from investors. There's an investor statement that's been supported by, I think, close to 9 trillion in assets from the Interfaith Center on Corporate Responsibility. And we've taken that call to action, which focuses on things like paid sick leave, obviously worker health and safety, working and being flexible with suppliers and customers, for example. And then finally, we can't ignore the fact that sometimes crises encourage or almost necessitate companies feeling that that they have to make extreme capital allocation decisions. So we think it's really important to also focus on ethical and financial prudent kind of focus. And this includes things like considering whether or not dividends need to be paid to shareholders, or whether you issue a share buyback. And we think it's really important that those same standards, governance standards, are in place. One of the things that has been quite interesting to see in terms of highlighting the vulnerabilities, right, of both workers and the benefits they have, or, for example, looking at how thin supply chains really are. But also this idea of the board oversight. I think many investors are focusing on the fact that perhaps many board members are overboarded, and having 4 or 5 companies in crisis at the same time, those board members cannot effectively oversee the discussion on extreme disruption or crisis management.
I guess there'll be a range of how well companies address those different topics, but do you think there'll be any broader fallout as we emerge from the pandemic, perhaps more broadly with sectors or areas of the market? Do you think there'll be any kind of specific hangovers really from this?
Yeah, well, I would say that we have over 30 million people in the U.S. that have been laid off. So I do think that we are already seeing the impact, and frankly, the appetite for looking at things like climate change. I think investors need to be diligent and really keep climate on top of the agenda. It's really unfortunate, but in terms of the short-term impacts, we've seen, I think, close to 100,000 clean jobs in the U.S. Go to the wayside. We've seen a 60% reduction in solar installations recently. I think wind hasn't fared as bad. And also the scrutiny on subsidies. The fact that $400 billion in fossil fuel subsidies have come to light. I think as investors and governments, we have to re-examine the reason why those subsidies are in place, and frankly, ensure that there is other ramifications. If they're going to get public investment and public subsidies, that there should be a demand by governments globally, including the U.S., especially the U.S., for things like reducing carbon footprint, GHG emissions, looking at protecting workers and paying them a more sustainable wage. There's many issues. I also think the focus, and I'll talk a little bit more at the end, but we need to look at how tax is managed by companies and the public influence in terms of their public policy engagement.
So within energy, you think there's potential that quite a lot of that capital funding from the public sector at least just disappears or gets reportioned elsewhere?
I think I actually am encouraged at the calls for green recoveries. I mean, you see this obviously in the EU and the UK, but there's a growing voice here in the US. You see discussions in South Korea, in Japan, places where you might not necessarily think that the focus on green recovery would be as highly prioritized. I also wanted to maybe highlight an issue where we're seeing massive amounts of capital being put into treatment regimes and vaccine development. And in the case of pharma, I do think that there will be fundamental implications on pharma's business models I think there's already been a call for, and in fact, we've had conversations with a number of our pharmaceutical companies over the last couple of months. There'll be, I think, a call for more open source data, disclosing clinical trial results at every stage. The idea that there should be a cap on profit, right? If there's a huge investment in R&D that pharmaceutical companies are getting, that's not just going to benefit their ability to develop initial vaccines over the next 12 or 24 months. It also fundamentally improves their own capabilities. And so there should be a way in which that public investment yields results in terms of public investment in health infrastructure and access.
Yeah, there's been massive government pledges for this stuff, and yeah, probably a more joined up approach globally as well. So it'll be interesting to see how that plays out. I mean, have you noticed any differences in company behavior around the world? I mean, have different countries acted differently, or regions, or is it much more kind of company specific, really?
I would say it's more sector specific. For example, we just talked about the pharmaceutical industry, but I think in the US especially, there is a real light, almost like a blinding light being shed on the lack of really sufficient worker health benefits, paid sick leave. And these are things we're actually looking at and talking to companies about. I mean, I've been happily surprised at some of the initiatives. For example, Home Depot provided 2 weeks of paid sick leave. Actually, it's paid leave. 80 hours to full-time workers, 40 hours for part-time workers, and this is on top of what they already get. And they can use it at any time for any reason during 2020. We see other companies, like in the food and beverage and retail sector, providing hazard pay, but only through May 30th. And so our conversations with some of those companies, for example, will be, well, how can you maybe look at readjusting the way in which you pay workers? Because in fact, hazard pay should be in place a lot longer, because this pandemic is not over. Would you like me to say anything about technology?
Yeah, that'd be interesting. I mean, technology's played a role in tracking the virus, and a lot of the things governments have been involved in. I mean, a lot of it seems good up front, but again, are there negative implications? How's it being handled, I guess?
Yeah, absolutely. So I think this is an area where I have a personal passion, because I've had a long history of engaging on human rights in the technology sector. In fact, I sit on the board now of the Global Network Initiative, and this has been an issue that's been front and center. We've been part of this group, which includes the technology companies and investors and academics and NGOs, to have a real conversation around the benefits of technology, but also the potential long-term implications. Because one of the things we want to see happen at the get-go is that companies are looking at proper ways of aggregating data, anonymizing the data, and also being restrictive in terms of who has access to the data. So I think this is going to have a fundamental impact, I think, on not only the current pandemic, but future pandemics, where I think customers and investors need to be aware of the potential erosion of freedom of expression and privacy issues. And so companies need to be more transparent about how their data is being collected, how it's being used, and who has access to it.
I'll stop for a second just to let all the audience know that you can also submit Q&A. So if you've got any questions for Lauren, please do click on the Q&A box, which I think is at the bottom of your screen, or if not, to the side, and you can fire some questions in. We'll have a bit of time at the end for questions. But perhaps a good segue into how your work integrates with the work of the investment team at Boston Common as well. And you mentioned a number of those sectors, banks, for instance, and also engagements with individual companies in the portfolio. Could you just bring it to life a bit more, how the work you're doing integrates with the funds that Boston Common are running?
Sure. We actually have a financial team and an ESG team, a standalone ESG team, but at every part of the process, we're fully integrated. And in fact, engagement, there are potential engagement areas that are actually highlighted as we review the stock that we follow up with. But more importantly, given the 30 years of experience that I have, much of our engagement is either cross-sectoral or sector-specific, and it's global. So just as our financial and investment professionals are looking at benchmarking from a global sector perspective, we are also doing the same thing from an ESG perspective, and that's been a process we've had in place since the beginning of the firm. And when I am looking at something like the 5 years of benchmarking practice in the banking sector, we get a sense of which banks are actually have real true corporate culture focus on sustainable finance, and at the same time decarbonizing their portfolios, and those that are just where this is just another part of the business in terms of maybe creating some green bonds or such, and so that feedback is reflected in who we invest in and who we don't, and in many cases our active engagement year on year with banks, even those that we don't currently invest in, give me an opportunity to really see kind of the risk appetite, but also the innovation that's happening internally. Some of the conversations we have and who we have access to are in many cases the executive management or functional leads for those areas. So we've done this in the banking sector, in the food and beverage sector, in the retail sector. We've done it pretty much for every sector we invest in. And I'm not the only one engaging. And so we also have issue expertise and industry expertise from the other three ESG specialists.
Thanks, that's really useful. And perhaps just reflecting on the initial poll that we did at the beginning, I mean, you've got the views of all the participants there, but what do you think are going to be the key areas that investors really should be focused on coming out of the pandemic and, just in the years ahead more generally?
I mean, I absolutely think that the green recovery is essential, and that should be a key focus for investors, governments, and NGO groups and companies, of course. But I also think that looking at kind of, again, let's take a step back and look at the ecosystem of finance and the ways in which companies have influence, and also the ways in which companies can contribute to the increased infrastructure and investment we need. And so the two other areas I think are really important are actually looking at lobbying practices, and the public policy engagement of companies, and making sure it's aligned into the trajectory, and also this idea of a fair tax or responsible tax practices. This was really a niche issue 5 years ago when we started, and I think that looking at responsible tax practices, not only disclosure but also how companies are paying a fair tax, allocating a fair tax in the places they operate and where they sell products.
And you've recently done a paper on that.
Yes.
Yeah.
So I think PRI just did a paper on it, and I hope we see a broader group of investors start engaging on this issue.
Okay, that's really useful. We've got a number of questions coming in, so I might just turn to some of those for now, and apologies if we don't get through them all, but we'll give it a go. So we've got one here, Lauren. Have you found that corporates have been less responsive to your engagement efforts during the crisis? I mean, especially when stressing more long-term changes that are needed.
Well, I think we've adjusted our approach to engagement. I mean, we're primarily focused on the short-term intervention of COVID. Though we definitely have continued engaging on some issues. We won't stop engaging the banks, for example, on transition to a low carbon future. But maybe the way in which we've been engaging has changed a bit. For example, instead of doing broad and deep engagements on climate with the banks right now, we're actually specifically working within a coalition to develop carbon accounting metrics. It's called PCAF, Platform for Carbon Accounting Financials, out of the Dutch banks, and developing global standards for disclosing carbon across 6 asset classes. We think that's probably a good way to keep in touch with the banks that we're investing in or collaborating with, as well as investors. So probably the way in which I'm engaging is changing, but it's not that climate, for example, has put aside as an issue.
That's good to hear. We've got another one here on a slightly different topic, but does Boston Common practice what they preach in terms of employment practices, carbon emissions, et cetera, et cetera? Is it real to your company culture as well?
This is all we do, and if you knew me, I actually started my career as an environmental studies major, so I'm very much in the E, but also the S and the G. So we, as I said, we're a B corporation, but we've also established, I think it's more than 15 years old now. We put out a carbon neutrality commitment and started to offset our emissions, including traveler visit, in 2005. And we've had 3 or 4 different carbon offset providers. We are very diverse as a company, and primarily women-owned and led. And I think even our racial or ethnic profile is over 50%. So we absolutely practice what we preach. And it's a little bit, I think also the fact that we do kitchen composting, and don't and have plates and cups and silverware instead of disposables. It really influences every aspect of the way we work and the way we live.
And I've got one more. I think we might have time for one more if anyone else has any and they want to submit them now. But Lauren, where do you think Boston Common and you've had most impact in your engagements in the work you've been doing?
I think I'm kind of partial to the banks, but I felt in 2014 that I was a lone voice. It was very difficult for me to find an organization or even a group of investors to join me, but that changed over the 2 or 3 years. The reason why we created a call to action to the banking sector is because no other organization and no other benchmark was actually looking at bank performance and climate metrics. And even some of the climate metrics we have in place in the report we just issued in 2019 still haven't been fully adopted, either by the banks or by investors. And then maybe the other area would be in eco-efficiency, where we felt it was really important to have an integrated management approach to looking at water waste, energy, and GHG emission reduction. And we've touched over 50 companies over the last 2 years, and these are portfolios we hold or held in our portfolio. So that was we've seen a lot of uptake and a lot of enthusiasm for on this efficiency.
Well, I think that's a good place to end, and a good example of engagement alpha, as we call it. So the additional alpha you get in portfolios as a result of the work of Lauren and team. So I mean, thanks very much, Lauren, for joining, and thanks to all the participants for joining as well. If you've got any follow-up questions, please send them through to us, and we'll be happy to answer separately. If you've got any questions on the new fund, please get in touch with the sales team as well.
Thanks very much.